stop. Before you click away, I need you to hear this. If you or someone you love is collecting CPP or OAS right now, in May 2026, there are changes happening that the government is not putting on billboards. They are not sending you a letter with a big red warning on it. And if you miss what I am about to share with you in the next few minutes, it could literally cost you hundreds, maybe thousands of dollars that you worked your whole life to earn. I am talking about your retirement money, money you paid into for decades. Stay with me because this one matters. Welcome back to Credit Smart Canada. I am glad you are here today because this video might be one of the most important ones I have put out this year. We talk a lot about credit, debt, and building financial stability, but today we are going straight into something that affects over 7 million Canadians who are either already retired or getting close to it. CPP and OAS. And the rules around both of them are shifting right now, in May 2026, in ways that could quietly shrink your monthly check if you are not paying attention. Let me set the scene for you. You have spent 30, 35, maybe 40 years working. You paid into the Canada Pension Plan every single paycheck. You followed the rules. You planned. And now you are retired or nearly there, and you expect that money to show up reliably, on time, the way it always has. That is completely fair. That is what was promised. But here's the thing about government programs. They evolve quietly, and the people who get caught off guard are usually the ones who never saw the update coming. So let us talk about what is actually changing and why it matters to your wallet right now. First, let us talk about CPP. The Canada Pension Plan has been going through what the government calls the CPP enhancement, which started rolling out back in 2019. But a lot of Canadians, especially those already retired, assume this does not apply to them. Here is where it gets tricky. The enhancement affects how much workers contribute and how much they eventually receive. If you retired before the enhancement fully kicked in, your benefit is calculated on the old formula. But if you had any employment income after 2019 and you were under 70, you may have made additional CPP contributions without even fully realizing how they translate into what is called a post-retirement benefit. That extra money sits there, and if you have not checked your My Service Canada account recently, you may be leaving a monthly top-up on the table that you have already paid for. Here is something else that is catching people off guard in 2026. The year's maximum pensionable earnings, what they call the YMPE, has been climbing. That ceiling determines contribution amounts, and it also ties directly into benefit calculations. As that number goes up, so does the complexity of understanding exactly what you are owed. Service Canada does not always send you a proactive breakdown. It is on you to check. Now let us talk about OAS, Old Age Security, because this is where I am seeing the most confusion and frankly, the most risk for Canadians right now. The OAS clawback, officially called the OAS recovery tax, is a rule that reduces your monthly old age security payment if your net income goes above a certain threshold. In 2026, that threshold sits at around $90,997. If your income goes above that number, you start paying back 15 cents of OAS for every dollar over the limit. And if your income is high enough, you could lose your OAS entirely for that payment period. Now, you might be thinking, well, my income is not that high, I am fine. But here is where Canadians are getting blindsided. Registered retirement income fund withdrawals count as income. The sale of a property counts. A lump sum from a pension counts. Even some insurance payouts and certain inheritances can affect your taxable income in ways that push you over that threshold unexpectedly. People who did a big RRSP withdrawal, sold a rental property, or received a large one-time payment in 2025 are now finding in 2026 that their OAS is being clawed back based on their 2025 tax return income. Service Canada looks at your previous year's income to determine the following July to June payment period. So the hit is delayed. It sneaks up on you. And if you were not planning for it, it can feel like money is just disappearing from your account with no clear explanation. There is also the GIS situation, the Guaranteed Income Supplement, which goes to lower income seniors on top of OAS. If you had any unusual income last year, even something like a one-time CERB repayment adjustment, a legal settlement, or a withdrawal from a non-registered account, it can temporarily disqualify you or reduce your GIS. And GIS is not automatically reinstated. You sometimes have to reapply. Seniors are losing this benefit not because they are no longer eligible in the long run, but because of a single year of income fluctuation that nobody warned them about. So what do you actually do with all of this information? The first thing I want you to do today, not tomorrow, today, is log into your My Service Canada account. If you do not have one set up, go set it up right now. You can see your CPP statement of contributions, your projected benefit amounts, and your OAS payment schedule. Knowledge is protection here. Second, if you are approaching 65 or already collecting OAS, have an honest look at every income source you expect to receive this year. Talk to a tax professional about how a large RRSP withdrawal or property sale might spike your income and trigger a clawback the following year. Sometimes timing a withdrawal differently by even a few months can save you thousands in OAS recovery. Third, if you are collecting GIS or you think you might qualify, do not assume it is automatic. Reapply annually when you file your taxes. If your income dropped this year compared to last year and you were previously told you did not qualify, you may qualify now. Income is reassessed every year. And fourth, if you deferred your CPP past age 65, good for you, because that decision increases your monthly benefit by 0.7% for every month past 65 you waited, up to age 70. That can mean a significantly higher check for life. But make sure you have actually applied. Deferring does not mean it kicks in automatically. You still have to apply through Service Canada. Look, the system is not always set up to hand you everything you deserve automatically. A lot of this falls on you to track, to verify, and to act on. That is not fair, but it is the reality of how CPP and OAS administration works in Canada right now. Here at Credit Smart Canada, this is exactly why we do what we do. Because financial stress does not stop when you retire. In some ways it gets more intense because the income is fixed, the rules keep changing, and the stakes feel higher when you cannot just go get another job to make up the difference. You deserve to understand the system that your own contributions built. If this video helped you make sense of even one thing about your retirement income, please share it with someone who needs to hear it. A parent, a neighbor, a friend who is close to 65. This information is too important to sit in an algorithm. Hit that subscribe button so you never miss a Credit Smart Canada update, and drop a comment below telling me what your biggest question is about CPP or OAS right now. I read every single one and I will do my best to address your questions in upcoming videos. Your retirement should feel secure. Let us make sure it is.